Welcome to Option Trades today. I'm Tony the Bat Batista, and I've got a trade idea for you today. December 1st, 2022. Can you believe it? Rabbit to everyone out there. What are we going to take a look at today? Well, for me today, it's more a matter of positions I already have on than the position I'm looking for. I already have a lot of NASDAQ stocks on. I'm going to end up going into another NASDAQ stock just because of this. Let's take a look at what's going on. Even the S&Ps basically unchanged. NASDAQ basically unchanged. Market unchanged. Volatility up by 18 cents. But as you can see, and from the callers that we got in today, volatility is definitely contracting. I like to look at /VX. I do not look very often at VIX. You'll see there are two different prices, 2044 versus 2130. They all move the same, but VIX is more of a date volatility, a specific time in date, than /VX, which obviously has no options. It's the future, and it's really what volatility is doing today, right now. 2230 up 20 cents. There'll be times you'll see VIX higher and /VX lower. I always default to VX. That's my pro tip for you today. All right. What am I taking a look at here? Well, the first thing I like to do is go by IVX 5-day change or click it to high IVR for my trades. I've already gone through them all. The one that I'm coming up with is a little bit surprising. SHOP up $2.23 today. You can see the IV rank of 42 is quite high. I'll go here to the highlighted area here. You know I like the IVX 5-day change to be positive. It's up a good 2%. The IVR, monthly implied volatility, IVR rank, 42%, relatively high on a $43 stock, opens up all of the strategies for us. What strategy are we going to look at today? Let's take a look. You go to a chart of SHOP, and you're a little bit surprised to find out SHOP has been on quite a tear after making a low in early October to 23. It's flirting with its old highs here back in August of 23 and change. So it really does set up for a good strangle trade, in my opinion. But you know what? I have a lot of strangles on, so I'm gonna try to keep my portfolio a little bit more balanced by strategies. I don't like to have all iron condors on. I don't like to have all strangles on. I don't like to have all calendar spreads on. I mean, you want to have a good portfolio of high IVR premium selling strategies with good pop, but you also want to be strategy diversified too. So I'm going to take a look at a strategy in Shopify, which I've used a few times. It's omnidirectional. No, it is not a ratio spread, because I really don't have an opinion on Shop. I mean, I kind of want to be bearish on Shop, but just because of the rally it's had from 25 to 43, but I don't know. It looks like the market's picking up a little bit of steam here for the end of the year. I'm at a quandary, so I've got to find something that's maybe a little bit bullish, but still omnidirectional. What am I going to look to do? Well, if I'm going to be bullish, I'm probably going to be selling something on the put side. I'm in January with 50 days, nice monthly implied volatility of 75, so you can go quite wide or quite long or far away from the money. But now look, the expected move here is just about $9, $8.60. So there, even though you're far away from the money, you're not getting anything for free here. This stock has a high implied volatility. What am I going to look to do? I'm going to look to sell. I think I'm going to go around the 40 puts, and we'll play with it from there. I could sell the 40 puts. I'm going to do a Jade Lizard. I'm going to do the 46.50. We'll go $4 wide. I can get about $4.25 in this. Now, I told you at the beginning of my segment here that I wanted to be maybe short Shop, yet this has a 20 long delta. So how can I maybe decrease my long delta? Well, I could move down my strike to 44.48, still be $4 wide. My delta doesn't change very much because this spread doesn't have a lot of delta to it. That's why I tell everybody, when you're doing a spread, if you're selling a spread, even buying a spread, you've kind of taken out volatility out of the equation here. But I can collect an extra 50 cents or so. I could move this option down to the 39, have the same type of pop, 74%. Before it was 72 or 73%. But my delta has decreased by just about 3 or so. I'm only collecting $4.15, which means I'm going to have no risk to the upside. That's why this line is green into perpetuity. I have no risk to the upside. I can only make 15 cents if the stock goes to 100. Now, let's be logical here for a moment. What's the chances on the stock going to 55, 60 in the next week or two? Probably not that good. In the next 2 or 3 weeks, there's just about a 40% chance that we get up to 55. But how much would this 44, 48 call spread be worth? Probably about $2.50 to $3, maybe $2.75 would be my guess. And this put would probably be worth around, I don't know, 50 cents or less. So you're looking at around $3, $3.25, depending on how quick it gets there. And you're selling this for over $4. Now, that's one way of looking at it. Another one, if you're more inclined or don't have as many strangles on as I do, you can get quite wide here. I would look to collect around $3-ish, maybe a little bit more. You can go all the way down to around the 35 strike. On the put side, that's a 19 delta. And you can go all the way up. If you're looking at a 19 delta, you can go up to the 55 or 56. I probably would default to the 55. You're looking for $2.50. If you wanted to collect around the same amount of premium and take advantage of that call skew, you would have to be having a little bit of a short delta trade all the way up at 49 on your short call and all the way down to 35. I think I'm talking myself into a strangle here. The buying power effect's only $420 some odd on this trade. Maybe I go a little bit tighter here. Now I've got kind of a short-ish delta, but really delta neutral. 49 strike is about $6 higher to the upside. 37 is about the same, $5 or $6 to the downside. This is interesting to me. $4.25. I just talked myself into a strangle instead of a omnidirectional, slightly bullish trade in shop. That's the spread I'm going to do. I'm looking at using about $400 in buying power. It has a beta weighted delta of just about 2 negative. It's 10 short deltas. It's got a 61% pop, so I have a lower pop than on the Jade Lizard that I was looking at. That's the spread I'm going to do. Now, listen, you can look and follow this trade and all the trades I do on the follow page by clicking on the follow page and then clicking Bob the Trader IRA. You'll see all of my trades here. Here's my last Google trade. I'm rolling up the untested side from a trade that we did about a week or so ago. Here's a trade in Microsoft that I did. A matter of fact, on this podcast earlier this week, on the 29th, when I was able to take a nice quick profit in Microsoft. But today we're doing shop. Please do me a favor, check out tastyworks.com. That's the platform I'm using right here, and that's how you can find all of our trades. I hope you hit the like button so that this podcast can grab some traction and they keep me on doing this for you into perpetuity. Enjoy yourselves. Have a great weekend. If I don't speak to you and you don't tune into our show on Friday, shame on you at tastytrade.com. But go to Tastyworks, open up an account today, take advantage of all of those perks, and I'll see you again on Tuesday.